Aloha, welcome to Java. This is for Wednesday, January 17th, 2024. Thank you kindly for joining me, especially if you are new. Please consider liking and subscribing, and thank you very kindly. Got quite a bit to go over, so let's start with our favorite risk indicator is the MMRI, Manarino Market Risk Indicator. It's higher significantly since yesterday, which is a short period of time. We're above 261 in the high risk area. So it kind of played out as we thought it would yesterday with the relative strength of the dollar as it increased, as well as the 10-year yield above 4.07 now, putting pressure on stocks. So as these rise, pressure in stocks comes down. We've got the volatility index, or the VIX, is also rising with this, as well as gold. We've got oil under a bit of pressure after they're having talks about the price as well as demand cuts. So let's move forward into why this is. We've got the sentiment right now is a cautious one. The market is wondering about cuts and whether the Federal Reserve, when they will cut and how many they will do this year. So with that, we've got a market calendar. We'll be watching the OPEC report, but really core retail sales, and also have a couple of Fed speakers today, as well as their beige book coming out this afternoon. Now, these are more important because aside from the real economy, whatever it is that they say regarding these cuts or affecting them will have more of an effect. So, we've got some more earnings coming out today, notably Charles Schwab, US Bank Corp, and Kinder Morgan, continuing with the earnings for the banks tomorrow, and they've been a bit weak, even with the larger banks. So, moving on, we'll see why this is. So, Christine Lagarde, head of the European Central Bank, she's talking about supply chain disruption, particularly through the Suez Canal because of what's going on in the Middle East. She's talking about how it could fuel inflation again because if there's issues with that, will raise the prices. So she's saying that it's likely the European Central Bank may cut rates in this summer, but not earlier. So they're also trying to balance their liquidity risks. They're concerned about this because if they don't have enough for their banks and the money is not easy enough, it could cause issues the other direction. So concurrently, their work in lockstep. We've got the Federal Reserve also talking about the risk of a premature central bank cuts, basically, with inflation could cause more issues. So as they see more higher inflation, and they are the ones to inflate, they'll have more issues with this. So they're talking about keeping those rate hikes for longer. So we've got European stocks kind of dropped on this news, as well as the UK had higher inflation numbers come in. So moving over to Canada's central bank, their stories coming out that their core inflation is spurring traders to cut back on their bets on Canada cutting their rates. And the language they're coming out with is just as important. So they've got this immigration surprises making the Bank of Canada's job harder. So they're talking about a population growth driven by quote unquote temporary residents. So they're talking about they've got a large influx of migrants as well. So they're saying a lot of them are quote unquote foreign students, but the large number, and they don't want to say are the migrants because they're starting to have societal issues because of these, getting a lot of pushback. So from this, we'll move on. We've got Goldman Sachs is a huge bank, and they had their worst annual profit in over 4 years. So there's trouble in the very foundations of these banks now. So we've got Blackstone is a real estate investment trust, basically, is what they're getting at. They're having a terrible performance for this year, uh, basically their worst yearly performance in history. And a lot of this is happening because the commercial real estate debt, more than 50% of the commercial real estate loans are underwater and in high risk of defaulting. So if these default, then they're going to have foreclosures in the commercial sector. We're already watching this come in. And that, of course, will hit the real estate investment trusts. So we've got the Maersk CEO formally coming out. He's at the World Economic Forum. We've got Davos going on right now. And he's saying that this could cause disruptions for months, not just days or weeks, but months, which is already what we were talking about. It would be a more longer term thing, even though they were saying it's a temporary thing. Their definition of temporary is a little different than ours. So, how does this affect the real economy? Well, businesses, in this case, it's Fatburger owner, they're raising their prices, cutting workers' hours since they can't cut their wages, because California has a minimum wage hike now for fast food workers. So every time you get government control in these things, it shuts out the private sector. So we're watching this heat come on to small to medium businesses and also the middle class. So this also means that companies that are cutting their costs, meaning uh, cutting their labor, whether it's through their hours, but basically losing jobs, is positive for the company because as they cut those costs, then it's positive for their stocks as people see that their company might make it through the downturn. So we've got Google laying off several hundred from their ad sales team now as this glut continues. We're going to have more employment. We've been talking about this. We're nowhere near where it needs to be before they do these cuts. So I thought these stories were interesting. Now, we've been talking about the insurance. It's becoming a huge issue, more than most are even talking about. So they're talking about the premiums going up 20%. In California, it's gone up more than 35%. This is talking about homeowners, but it's also with vehicles. It's also with contents. It's also with lease rentals, mortgage insurance. It's just an insane sector. So I thought this was interesting wording here with this article. Newsweek is saying that Gen Z is choosing not to drive. Well, this is really not because they want to keep the environment clean or because they want to ride their bicycles or they really want to do good. It's because they can't afford it. Can't afford their cars. The payments are ridiculous. The interest rates are ridiculous. They don't have access to inexpensive money. And the insurance on top of that is made it just not affordable at all. So, as it starts with vehicles, we were talking about this, crush that market, we'll move up to homes. Because trust me, if you put a free Lamborghini in front of Gen Z, they're going to drive. So, it's not because they're really choosing not to. So, we've got another story kind of going along with this. It's hurting Tesla because they're finding out in these snowstorms that their cars won't charge in the freezing cold. So, got a lot of dead electric vehicles around because there's no alternative for them. So, moving on with the larger companies and the things that are driving behind this, we got Microsoft boss talking about how uh, they have no issue with open AI structure. Now, all of the major companies are in a race to get their artificial intelligence out first. There's massive profits at the end of it. And so, what's happening is they are throwing caution to the wind, so to speak. Now, Microsoft does not directly own OpenAI. However, they sit on the board, they have a huge influence over it. So, watching this, Google has their own version, Bard. We've got Amazon's always had Alexa as well as some other ones. And we've got Facebook with theirs. So, Mark Zuckerberg, and this one is to be deposed in a suit targeting Meta because they've been secretly harvesting facial recognition without consent. So we're going to have more of these stories coming out, and it's just they're not going to be playing by any rules that benefit the consumer. So I'd like to go into a couple of lava updates before I let you go. We've got health officials now warning of exposure to highly contagious disease at a couple of airports. Now, I don't know how they know already that they're coming specifically from airports, but what they're talking about in this case is measles. So, talking about it being highly contagious, kind of driving this in. I'd like to keep in mind that they already are scrambling for a cure and for a control for quote unquote disease X that does not even exist yet. So, don't know how they're working on this, but they're just kind of driving towards this problem that doesn't even exist yet. So the FDA has approved the gene editing treatment for sickle cell anemia, but this could really grow from here. And why do I think it's such a problem that they can recode your very basic DNA as a human? The implications are a little crazy. So, anyway, we'll be watching this because I still have a flag warning banner over my content, but watching this one as well. So, with this, just a reminder, stay outside their system as much as you possibly can. Wishing you all a green trading day, just a wonderful day in general. And until I see you again, my friends, stay free.